So, the stock market this week has been doing some pretty crazy things, but I'm not worried. No, I am not worried at all. And I'm going to tell you exactly why in this video. So if you know my story, I've been investing since 2009. I've been investing in the stock market through my 401k with my job since 2009. And I've basically been investing in the US stock market. And I've seen the ups and the downs in the last 12, 13 years. And I can tell you, if this is something new to you, the ups and the downs, the roller coaster ride of the stock market, well, that's a good thing because this is what you want to experience right now, especially if you're a beginner investor. This is going to give you some backbone to be able to withstand some of those financial storms, if you will, in the future. Like I said, personally, I am not worried at all. This is what I expect. I expect the market to go down. I expect the market to go up because I am a long-term investor. And this past week is an example of why personally I do not day trade, because there's a lot of emotion that goes into just kind of navigating through the day-to-day of the stock market. You see the news, you see the headlines, you're in the actual day trading throughout each hour of the day, and that can be frustrating, that can be emotional, and that's what I want to get at. I want to get at a lot of you folks out there who are thinking about day trading. I've been investing for 13 years and I messed around with options and I did a little bit of day trading here and there early on. And if you want to just get that out of your system, you can try maybe 5% or up to 5% of your portfolio, 5% of what you invest into day trading. But I personally just would try to stay away as far as I can because I've got a long-term investing horizon that I'm looking to achieve, that I'm looking to get to. So let me tell you, during times like this, I would log into Fidelity to see how my portfolio is doing. It's down 2% today. It's up 3% tomorrow. It's down 0.5% today. It's up 2.3% tomorrow. It's just frustrating and it can be a roller coaster ride. It can mess with your emotions big time. But for you folks out there, the more you don't look at your portfolio, the more peaceful you will be, the happier you will be, and the less stressed you will be. I'm telling you from experience. If you can, please try not to check your portfolio, especially in times like this. Maybe a quarterly check-in or a monthly check-in at most is what I personally do now. I'm not checking into my 401k. I'm not checking into my IRA. I'm not checking into my taxable accounts day to day to day. That's too much. And I don't think that's reasonable if you want to try to maintain good mental health when it comes to your money. Again, the reason that I do this is because I have a long-term investing goal. I'm not investing to earn money in the next week so I can cash out and just go spend it on something. I'm buying and holding. I'm dollar cost averaging when I'm continuing to put the same amount of money into the same investments weekly, monthly, whatever that frequency is. I'm doing that. And I'm going to continue to do it over the next 20, 30, 40, 50 years. Of course, as I get older, my strategy will change. I'll be less exposed to the volatile index funds or ETFs. I'll be more conservative with my investment. I'll still have stock index funds. I'll still have my VTIs, my VTSAX, my FSKAX at Fidelity. I'll still have those investments and those types of investments. However, I'm not going to have it 100% into that or 80% into that and then 20% into my other investments. I'll probably be 50, 60% of those stock index funds and then 30, 40% of another index fund that's going to be a little bit more conservative, fixed income, like a total bond market ETF or index fund. And I'll have a real estate investment trust index fund or ETF that I'm going to have exposure to the real estate market. I'm going to try to diversify that way the older I get. But right now, for many of you in your 20s and 30s, even 40s, you're still in your accumulation phase. You're still in that phase where you're trying to buy as many index funds and ETFs that you can. And don't worry about the ups and downs right now. That's the biggest lesson that I learned in my late 20s and into my 30s is I'm not concerned right now. The past is really all we have. And what we've seen through so many different events and circumstances that the US economy and the US stock market has underwent, it still survives and it still continues to rise and rise and rise. There's something important in that because you don't want to be that person who cashes out when the market gets to the bottom and then tries to buy back when the market is all the way back to the top. You're going to basically lose the value of your investments because you're selling at a period where you've already gone down and you've missed the opportunity to buy back because you're trying to wait when it gets to the very, very, very bottom. But you don't know that. I don't know that. Nobody knows that. And friends, that's called timing the market. And very few people are actually good at that. In fact, those who are good at that tell other people you do not want to do this. This is not the way to invest. So the buy and hold strategy is still the best investing strategy, in my opinion, especially for those who are doing long-term investing, those who want to build wealth over the next 20, 30, 40 years. Just continue to buy and add more ETFs, index funds, of the funds that we've talked about in previous videos. I'll link to some of those at the end of this video, but I want to leave you with this. Never panic, stay the course. And no matter what you see in the headlines on YouTube, on Twitter, on Instagram, on your TV, just continue to stick to your plan. My plan is low-cost, broad-based index funds or ETFs that I'm going to continue to buy and hold and continue to invest that same amount, slowly increasing how much I'm contributing each month into my 401ks, my IRAs, until I max those out, and then also my HSAs. And then I'm also starting to invest in a taxable account, and more videos on that will be coming. So make sure you subscribe so you don't miss any videos like this. And if you're interested in learning some pretty good investments that I've researched and looked at, make sure you check out one of the 2 videos on the screen right now. I'll see you very soon. Peace.